Namaskar everyone. Good evening.
Good evening, sir.
Good evening, sir.
Good evening, sir.
Namaskar, sir.
Namaskar. Okay, so today actually we are going to learn something really exciting, and especially for those like who have been working with us for quite a long time. Pratik, I think you missed yesterday's class, right?
Yes, sir.
Okay, so have you gone through those videos of EBITDA calculation and EPS calculation?
Yes, sir. Those two things I've seen. So,
Yeah.
but I have a few doubts.
Yeah, of course. You can like get back to me regarding that after the meeting is over, or even anytime tomorrow.
Yes.
Okay. Okay, like what are the doubts do you have? You can just ask.
Okay.
I think many others also will have same doubt. Ask.
So I could not catch what you said. I could not hear you.
I am saying you said you have
Hello.
some doubt regarding the EPS, right?
Yes, sir.
Yeah, so you can ask whatever
Yes,
doubts
sir.
you
I
have.
actually wanted to know what is. So right now or later in the group or
Yeah.
tomorrow.
Right now. Ask. I think many of you will have same doubts, so you can ask
So
that.
while calculating the EPS, I could not understand what exactly was paid up equity share capital. I mean, we were using that as a parameter to divide, right?
So see, paid up
So,
means
sir, I
it
tried to
has been
Google,
paid
but
by
I
the
did not
investors, by
really
the
understand.
subscribers. It has been paid by the subscribers.
Sorry?
Let us take a practical example of what is paid up capital.
Okay.
Is my screen is visible? Is my screen visible to all of you?
Yes, sir.
Can you please see my screen now?
Yes.
Okay.
Yes, sir.
So he asked what is paid up capital. Why I am doing this? There is a reason. I think someone asked the same question to me today, right? I think Prasanjit was asking regarding this. You guys can do also one thing like make a PPT on that. See, authorized means what has been authorized, and paid up means it is issued and people have subscribed to it, fully subscribed to it. So there is one thing called as partly paid up shares, another thing called as fully paid up share. So I am just trying to find out. Let me see whether it is still trading or not. Okay, Board of Directors still held this meeting as approved. Into fully paid up share. Okay, so just can you guys just read my screen? What is written here? Everyone?
Yes, sir.
Okay, so what is written here? Just read this headline. Actually, I was thinking it will be still available, but it is still not available. So it's okay. The board of Tata Steel, at its meeting held on 27th of December 2021, has approved the conversion of 1,22,938 partly paid up equity shares of face value rupees 10 each, rupees 2.504 paid up. Means among this, only this much amount was paid by the shareholders. So this was partly paid up. Money, the face value of the share is actually 10 rupees, but you paid only 2.504 rupees for a share, and that is partly paid up share. So what is paid up share? Means it is fully paid up. So entire this 10 rupee face value you have totally paid it. So this is your fully paid up share. So what they did is, you can see rupees 10 each, rupees 2.04 paid up into fully paid up equity shares of face value 10 each, on which first and final call money of rupees this was called. Just leave it for now. So like do you guys those are who from commerce background, what about you? Like, are you guys understanding what I am trying to say? Pratik won't be understanding
Yes,
this
sir.
thing. Others, we used to do equity share accounting in our class 12th and then in our graduation days, right? We have done this accounting in our accountancy subject, right?
Yes, sir.
We used to, were used to be the journal entries at first. The first journal entry, what it used to be, can you guys tell me? Pratik, I will come to you with more simpler words. Can anyone tell me what used to be the journal entry for issue of shares? The first entry? Anyone?
Sir, bank account debit to share application.
Equity share application account. And then for the second journal entry, what it used to be? Not the conversion one. Equity share application to equity share capital, I am not talking about that.
First call.
Then the third entry, what it used to be?
Share application to share capital.
Yeah, that everyone knows. After that, the third entry.
First call entry to share share
And if
capital.
that used to be securities premium, right? Securities premium of rupees 2, like that. There used to be also securities premium,
Sir,
right?
that depends upon case to case.
Yeah, that depends upon case to case whether it is 2 rupees or 5 rupees, right, Shubham?
Yes, sir. In some cases, premium might not be there as well.
Exactly. So we used to call it issued at par, issued at discount, issued at premium, right? You guys
Yes,
remember
sir.
this simple concept of accounting which we did during our early school days and college days? Everyone, please say yes or no, anything. Just keep interacting with me. So what
Yes,
we
sir.
Yes,
actually
sir. Yes,
did
sir.
is, see, what we actually used to do was not really completely theoretical. Actually, it was practical thing. So board of Tata Steel approves conversion of partly paid up equity shares. So they had partly paid up equity shares. Now they have converted it into fully paid up shares. How they have done it? Read this news. The board of Tata Steel at its meeting held on 27th of December 2021 has approved the conversion of 122,938 partly paid up equity shares of face value of rupees 10 each. Rupees 2.504 was paid up. So means equity share first call, second call, final call was left, right? It was not yet called till this time, right? Into fully paid up equity shares of face value rupees 10 each, on which first and final call, we used to pass this journal entry. Remember, everyone? Everyone?
Yes, sir.
Yes, sir.
So this is practical, 100% practical thing. Now, can you guys, connect those dots? What you actually learned in your in your school or college days? Now this is paying off, right? You used to do those sums to get marks, but see, this is the reality. So first and final call was made of rupees 461. Now, can you guys tell me one thing? That if only 2.504 rupees were paid, right? So how come that face value was 10 rupees, and how come this final call, first and final call, was made up 461 rupees? Tell me. This is very interesting. Tell me.
This is based upon the market value of share.
It's
Face
okay, but
value
where
remains
is that
10.
securities premium? We used to do na securities premium account credit.
Yeah, yeah.
Yes, sir.
See,
Yes,
it is
sir.
written in the next line na, of rupees 7.496 per share. This was the remaining face value, right? Comprising face value of rupees 7.496 per share and securities premium of 453.404 per share has been received. Now you guys understanding what practical thing we actually used to do whatever we studied in our class 12 or even in our college, na, it was actually completely practical. But for our sake of understanding, for so that we can easily understand those you know those chapters, they used to write ki securities premium of 2 rupees only, securities premium of 5 rupees only, 10 rupees only. 10 rupees, so I have never done, never solved any question on 10 rupees of securities premium. And see, what is the securities premium here? 453 rupees. Isn't this too high? And why is this premium charged? Why it is not issued at par? Why it is issued at premium? And that also this much?
Sir,
Anyone?
intrinsic value of the company,
Exactly.
asset value and intrinsic value of the company is greater than face.
Exactly. Exactly. Prasanjit, are you here? Prasanjit Sen? Where is he? He was supposed to join today. Prasanjit Saha. We were discussing
Yes,
it,
sir.
right? We were like, somewhat discussing it, close to it, right, today?
Yes, sir.
Anyways. So actually, he came up with a good question today on JSPL's, how to calculate EPS of JSPL. So we had a good conversation today. So yeah. Anyway, so this is the thing, right? What is partly paid up share? What is fully paid up share? Is this clear to all of you? Now, what is authorized, right? So Pratik, what you were asking me is what is this, all paid up capital, right?
Yes, sir.
So, have you understood what we just discussed? Please be
No,
honest.
sir.
You didn't understand, na? Okay. See, suppose you have your own company, Pratik Singh Limited. Okay, Pratik Singh Private Limited. You have created one own company. Now, suppose you are into construction business. Suppose. So, after running a business, you have made a good business. Now, you want to make public issue of your shares in the share market, right? And suppose, see, you are the sole owner of that company. Let's say for now you are the sole owner of that company. You are the only one owner. So now suppose your company is valued at 100 crore rupees. Okay, so you own that 100 crore rupees company, right, all by yourself. Clear, Pratik?
Yes,
आपके
sir.
पास एक कंपनी है, आपने एक कंपनी चालू किया जिसका भी वैल्यूएशन है 100 करोड़ रुपए, 100 करोड़ रुपए, राइट? सो you are planning to expand your business. Now, how come you can expand your business? Is you can take more projects under you. You can apply for more tenders. You can do many other things. Or suppose if you are into real estate business, you can invest more into lands and start building up properties, right, Pratik?
Yes, sir.
So for that you need some money, right? But suppose you do not have any cash in your pocket right now. Okay, your business is running good, but suppose you do not have any cash right now in your pocket. You are running a business, it's good, it is valued at 100 crore rupees. आप 100 करोड़, आप 100 करोड़ के मालिक हो गए, बट अभी आपको बिजनेस बढ़ाना है, तो बट आपके हाथ में अभी मतलब पैसा अवेलेबल नहीं है. सो व्हाट यू कैन डू इज यू कैन टेक अ लोन, राइट Pratik?
Yes, sir.
But banker has refused you. Banker is saying, no, after COVID, actually, we are not really, lending to construction sector currently. So, like, you have been to many banks, and all of them have disappointed you. All of them said, no, we are not ready. And you are not well versed with this, institutional investors, this private equity guys, and all those stuff. You are not well versed with them as well. Shubham is asking, how does valuation of a company is calculated, on what basis? Shubham, it is a very big question what you have asked. It is very prominent, but it's very big. It will take long time to get to this one. So please leave it for now. I will take all of you through it. Don't worry. Okay, so you tried to get a loan, but you have failed. So now what you thought ki, okay, let me do one thing. I have this 100 crore rupees company, na? So let me share some of my holding with other people. So you approached me, you approached Amanjot, you approached Rajendra, you approached Sanya, you approached Shubham, any number of people. Okay, and all of us together, say 100 people together, decided ki okay, Pratik is doing really great. And we think that see, we are earning 6% on FD. So if we work with Pratik, I think he has huge potential. He can generate a return of 20% for our money invested in your business. Means if all of us together give you 20 crore rupees, you can generate 20% return on that. Are you understanding, Pratik?
Yes, sir.
आपको समझ में आ रहा है? समझ में नहीं आ रहा है तो पूछ लीजिए.
नहीं सर, कुछ नहीं समझा तो I'll ask you.
अच्छा ठीक है, शर्माइएगा मत, पूछ लीजिए प्लीज. एनीवेज, तो हम लोगों को लगा कि भाई प्रतीक अच्छा बिजनेस कर रहा है, इसके साथ मिलके अगर हम लोग भी बिजनेस करें ना, तो हमारे पास तो पैसे है, बट ये एफडी में रखेंगे तो सिर्फ ओनली 6% इंटरेस्ट इज जनरेटिंग ना. बट प्रतीक के साथ अगर बिजनेस करेंगे तो वी विल अर्न 20% रिटर्न. कहाँ एफडी का 6%, कहाँ प्रतीक के साथ बिजनेस करके 20% रिटर्न, बहुत बढ़िया रिटर्न है. तो ऑल ऑफ अस टुगेदर थॉट कि चलो प्रतीक के साथ मिलके बिजनेस करेंगे. ठीक है, अब एक लिमिटेड नंबर तक अगर आप अकेला बिजनेस कर रहे थे एंड आई हैव जॉइंड यू, देन you plus me, this is partnership business. Maximum how many people can there in a partnership business? Minimum 2, maximum 7. Acha, in case of what do you call that, in case of banking companies, it is minimum to maximum 20 people can work together as a partnership under Partnership Act 1932. So but when you are engaging so many people along with you, this becomes share, means Pratik Singh Limited. It won't be private limited firm anymore. It won't be a partnership firm anymore. It would be a public limited firm now. It will be called as public limited. Why? Because you have many part owners of your business. Not 1, 2, not 7, 20, 1,000 crores, millions of shareholders you can have. So that is called as share. And while you are issuing your share, means part ownership in your business to public at large, that is issue of shares. So how you can issue shares to people is you can come up with IPO, initial public offering. So through that what you do is, Pratik, you must have seen that Adani Wilmar has listed today on the stock exchanges, and I just checked in the morning that it was trading. Its issue price was 232 and it traded around like 227. I don't know at what price it has closed. So what Adani Wilmar actually did is that they had a good business. So they said ki we want to sell our shares and raise money because we want to expand, we want to pay off our debts. Right, Pratik? Clear? Sab log clear,
Yes, sir.
everyone? Is your concept clear till this point? If you have any doubt, you can just ask
Yes,
me
sir.
anytime, please. Don't feel shy. Okay. So Adani Wilmar thought ki, okay, we want to expand our business. So we think ki the best way to expand our business and get money to expand our business is by selling shares. So they sold shares of 12.5%. So they had 100% shareholding, 50% Adani Group, 50% Wilmar Group. Wilmar Group is a Singapore-based group. So it is like mostly into FMCG and edible oil business, and Adani had their different business. So anyway, so they have founded their business, and now they are selling. They have sold 12.5% shares of their company at a price of around valuation of around most probably 3,300 crore, like that. They have raised from this इशू ऑफ शेयर्स, मतलब शेयर बेच के 3,300 करोड़ के आसपास आई थिंक पैसे उठाए हैं बाजार से. What LIC is trying to do is simply they are just trying to issue their shares in the market and get money. Now what is this paid up capital? So Pratik, your question was what is this authorized capital and what is this paid up capital, na?
Yes, sir. Basically, I could not understand how we are using this paid up equity share capital while calculating EPS.
Yes. So for paid up thing, is it clear for you, Pratik and everyone? Is this clear? What is paid up capital?
Sir, you just, the last sentence that you explained about how Adani Wilmar sold 12.5% of its stake for 3,000 crores. So that the money, the paid up capital?
Yes, that is the paid up capital.
Okay, sir.
That is money, that is actually issued and paid up capital, issued and subscribed, that one. So what you were saying is, just let me take you through it once again so that it gets completely clear. Actually, we will be discussing all these things during our capital structure discussion. So you can even wait till that point, but as you have asked, let me just take you through it, no problem. Actually, for that, you must go through the entire balance sheet thing. means what you were asking is they have the authority to issue those many shares. So they can issue, suppose they have authority to issue 100, they can issue 50 as well. It's trying to get to the main point. Okay, Pratik, I will make a separate video on that if you have doubt. Okay. So for
Yes,
now,
sir.
just have a small understanding. Authorized means you have the authority to issue those many shares. And issued and paid up means you have issued those shares for public at large and they have paid the money. So that is paid up share capital. Is this small concept
Okay.
clear for you? Just this much? If not,
Yes,
tell
sir.
me. If not, tell me.
No, so
Suppose
this much is
if all the
clear.
authorized capital of 3 crores is subscribed by the general. No, Shubham, that is not authorized, that is issued one. Authorized means you have authority. If all the authorized capital of 3 crore is subscribed by the general public, then at the end, it is the paid up capital. However, only 2 crores of capital has been subscribed by general public, then paid up capital will be this much. Yeah, that is thing. No, see, if all the authorized capital you were saying, then they have to issue this thing, na? They have to issue this. They have authority to issue, suppose 100 shares, and they have authority to issue 100, but they have issued actually 50. So this is their issued capital, and if it is subscribed fully, paid up, then it is paid up capital. Can a company increase its authorized capital? Yes, they can. Definitely they can. Acha, I saw Pankaj has joined. Pankaj?
Yes, sir.
Pankaj,
Good evening, sir.
yes, good evening. Pankaj, can you clarify what is authorized versus paid up capital, authorized share capital and paid up share capital? Can you just explain it in short?
Yes, sir. Authorized share capital is data share capital that authorized in our MOA that we have taken approval in our memorandum of association that only this share be only issued and the issued share capital is share capital which company issued public and paid up share capital is that share capital which
Has been subscribed.
which subscribed by the public. So this is basically the difference between suppose there is paid up share capital is 100 and subscribed share paid up share capital is 100 sorry authorized share
Authorized.
capital is 100 and issued share capital should be 80 and paid up share capital is like 60 when public subscribe initially when company IPO comes in market and public pay the same like 60 80 as we reach in our final accounts in class 11 and 12. Yes.
But what you were saying that in that case, if the issued one is 80 and actually paid up and subscribed is 60, na, then that is actually under subscription of the issue of shares, right? So that
Yes,
time,
yes,
if it is
sir.
like if the subscription percentage is less than 90, then there is a trouble.
Yes,
They won't be able to
yes,
go
sir.
forward with the issue. So then
If
underwriters comes, right?
subscription if subscription percentage is less than 90%, then company have to return this amount and but this not happen in many cases as underwriter subscribe the issue
Exactly.
when our
So
share
Infosys
got
also did it.
less than 90%.
I made a presentation and shared it on the LinkedIn. So this was exactly happened with Infosys's IPO. While Infosys
Yes,
issued their capital, I think it was subscribed around 87%. And this JP Morgan most probably was their investment banker and underwriter of shares. So they actually, just a second, someone is calling me. Yeah, so
okay.
anyway, so yeah, so this rest 13% they subscribed and just made the issue go on. Okay, and then see what has happened. So yeah, just wait.
Sir, your voice is not too clear.
ও আচ্ছা আচ্ছা একটু উপরে আসুন, আমি মিটিংয়ে আসি তো একটু উপরের দিকে আসুন, মানে সিঁড়ি দিয়ে উপরে আসুন। হ্যাঁ হ্যাঁ হ্যাঁ, দোতলা তিনতলায় চলে আসুন, আমি আসছি। Hello.
Yes, sir.
Yes, Shubham, they can issue 100% of their shares. See, companies like ITC doesn't have any promoter shareholding. ICICI Bank doesn't have any promoter. So yes, definitely they can. And what you have written is perfect. So when and why does a company increases its authorized capital? When they want to issue more, they want to, if they want to increase their number of equities on book, great, more than what it is, they can. This is why I am saying it is a, while we will be studying the capital structure, then we will have to go through everything. What is securities premium? What is everything, reserves and surplus. And anyways, today we are going to calculate EV by EBITDA. So for that calculation of enterprise, no sorry, enterprise not enterprise value, price to book ratio we are going to calculate. So for the calculation of book value, we have to go through it. Just a second. Hello. Hello. हाँ. আচ্ছা ওই নিচে গিয়ে বলুন, ওখানে লোকেরা রয়েছে করে দেবে। আচ্ছা আমি বলে দিচ্ছি, আসছি দাঁড়ান, এক সেকেন্ড বলে দিচ্ছি। যখন বলি তো if they want to generate more funds, they can increase it. Assuming company has potential to increase their authorized capital. So what is question, Shubham?
Sir,
Yes.
sir,
I think, sir, I think he want to say that if company want to raise more funds, then company increase its authorized share capital and public will subscribe the shares and they will. Then this is the process of this to increase authorized share capital.
See, for that we actually need to have a just one second. চাবি দিয়ে দিয়েছি তো। আচ্ছা আমার এখানে এ নেই, 37-এরটা এখানে নেই। দাঁড়াও দাঁড়াও দাঁড়াও। Yeah, sorry for the interruption. Yeah, so see, for this, capital structure, na, we must dedicate at least 2.5 hours to get through all those stuff. Still, it won't be sufficient. So for now, just have patience. Just have the very basic idea. Pratik, is your doubt is clear?
yes, I got the basic idea, and as sir, I feel I'll start with my basics, getting my basics cleared this week. And if any doubt, I'll just ask on the group, or I'll ask you
You ask
directly.
me. Why you have to ask anyone else? Arey,
No,
I
sir,
have started
I
that.
meant even you're on the group, right? So,
See, Pratik, I have released 2 videos on economics. Those are very simple videos. I know that those videos are quite lengthy, but you can start with them. This will give you a base of what economics is, and I do not think that it would make economics a boring subject for you. Because the problem with economics is that in finance, economics is like economics, business studies, and accounting. These three are like super thing. My most favorite thing. Pardon. Yeah. So economics is actually the basis of what is happening here. And business studies means you are running a business. So how business works? It is everything is there. and accounting is the money outcome of all those. What economics, what business is going on there, accounting is the outcome of that. So these three subjects you must learn, and so this is why I actually started with economics and not with any difficult equations and all those stuff. I just tried to make it as like light as possible. I don't think that it will be really that bad class that I have shared already. I do not know. I think Vansika is economics masters. She should go and like tell me what are the bad things over there. How should I improve it, anyways? Okay, so can you guys see my screen?
Yes, sir.
Chaliye. So today we are going to calculate these things. That is price to book ratio. Do you guys know what is price to book ratio? Price to
No,
book ratio.
sir.
Everyone knows? Okay, what is price to book ratio? This PB. Can anyone explain what is PB ratio? Why it is so important? Why PB ratio?
So to check if the company shares are undervalued or overvalued.
Okay, how to calculate
It's a
this
comparison.
ratio?
So it's a comparison of market value of shares to the intrinsic value of shares.
Okay, but how do you calculate this?
Book value.
How do you calculate this price to book ratio?
So current price divided by book price of shares.
Okay, book value of shares. So how do you calculate this book value of shares?
So it's decided according to the revenue available.
Sir, I can try and explain the ratio. The
Please,
total
please.
thing. Sir, basically we need 3 to 4 parameters with us. That is the first we should know the market cap of the share. That is the market value into the number of outstanding shares. And then we need to calculate the book value of assets. That is the total assets minus total liabilities. And that will also we need to also minus the intangible assets. Then suppose if a market current market price of a share is 95 rupees and it has an outstanding shares of 1000 rupees. So and the net asset value that we have calculated is 90,000 rupees. So basically we'll divide that 90,000, that is net asset value, by the number of outstanding shares. So we'll get the book value, which will be around 90 rupees. And then we'll directly divide the current market price at 95 by the book value per share we found to be 90. So we'll get the PB ratio around 1.05.
Now let us actually calculate the book value of share. Yeah. So this is consolidated balance sheet of Jindal Steel and Power Limited. Is this clearly visible to all of you? Consolidated balance sheet as at 31st March 2021. This is Jindal Steel and Power's consolidated balance sheet. Is that clear? Is this visible?
Yes, yes.
ठीक है. So what we are trying to calculate here is price to book ratio, PB ratio. So if the PB ratio of any company is greater than equal to, let's say, 1, how would you interpret this ratio as?
Right.
Yeah, is it undervalued or overvalued?
Sorry, it is nothing. It is at par.
Okay, if it is only greater than, then let's say it is
Then our MPS is more than our book value.
okay, this is one way, but I am saying suppose the price to book ratio is 2. Okay, so would you consider it as overvalued or undervalued, this share?
Sir,
So overvalued.
sir,
The answer is it depends. You cannot really say कि two times price to book is whether overvalued or undervalued. You cannot really say it and come to one conclusion and say कि this is it. There is nothing called this is it in the market. So if you don't believe, just look at it. Just take a look at this one. This is Hindustan Unilever, right? Look at this. And look at this from share market's perspective right now. The share market's perspective, you cannot do really anything. See, price to book ratio is 11.16. Of which company? Of Hindustan Unilever.
HUL.
So, how come it is 11.16? Don't you think that this is too much expensive? Price to book is 11.16. Don't you think that it is too high? Yes or no? Say something. Engage.
Yes, sir.
No, sir, this is not too high.
Why?
Because, sir, in calculating book value, we take the market value of the assets.
Okay.
So when we compare market value of assets with MPS, then this
What is the
will
book value of Britannia Industries? Look at it.
Sir, we can
Britannia. Yes.
compare with the industry PV ratio also, na?
Correct. But then also, if the Britannia's PB ratio is 23.53, right? Why I am taking you through all those stuff? There is a reason. I don't think that we have to go through any more these things. Okay, just let us go through one more company. What does it actually mean by price to book ratio is you are paying a price for a particular book value per share. See Asian Paint, it is 23.33. I don't think that we have to go through all those stuff anymore. See,
sir,
yes, yes.
the PV ratio basically denotes how many amount of money we give for 1 rupees of book value share.
Yes, that is it. That is the thing.
Huh?
Yes, that is the thing.
That's some crux.
Yes, of course. Now, as you raised this point, let me. Why I am taking you through all these things, you will understand later. Not right now, at this moment, you will probably think this is a very lengthy process of learning, but this is the way actually to learn. I have learned this over my last 7 years of experience. Are you somehow getting shocked now? Price to book of 15.90. Book value per share is this 235 rupees 0.49. And for this much of book value, what you are paying? This amount. But why are you ready to pay so more? 15 times, almost 16 times you are paying more of book value. Why? Book value means it is actual value, na? So why you are ready to pay 16 times more than what you are actually getting? Warren Buffett said, "Ki price is what you pay and value is what you get," right? There is a quote in the stock market that price is what you pay and value is what you get, right? So why you are ready to pay so much when you are getting a value of only this much? Why? Why?
Because of growth prospects, sir. Investor think that the company will grow in future.
Stability of growth. सिर्फ growth नहीं, stability of growth. shareholders, they are expecting that this company is going to sustain their growth over a period of time, and in long term they are going to multiply the, as per the compounding effect, they are going to compound the return. This is why investors of these companies are ready to pay such huge price. They are ready to pay, see, they are getting only 235.49 rupees. For that they are paying 16 times more, 16 times. मतलब इट इज़ लाइक कि 5 रुपए के बिस्किट आपको खरीदना है एंड आपको 16 गुना ज़्यादा पे करना है, तो आप 80 रुपए देकर के एक 5 रुपए के बिस्किट का पैकेट खरीद रहे हो. Why would you do that? If it is only a life-saving drug, suppose a life-saving drug is there, suppose you are down with COVID, I do not want any of you guys to be like that, but yeah, at the time of COVID crisis, what used to happen ki for oxygen, for remdesivir, मतलब 100 का medicine 500, it doesn't matter. It is a life-saving drug, so we want it, right? Because we expect that this is going to save our life, right? Same in share market. We know that we are getting this much value only, but for that we are ready to pay 16 times more because we are thinking that actually what we can, this company, what it can deliver, what growth it can deliver is justified with this valuation as well. Now just look at one simple thing. This company, Home Finance, this is a small housing finance company. You will understand this if you just look at this thing. If what I am trying to tell you, its price to book, look at it, 0.79. So it is undervalued, isn't it? Look at its price.
Yes, sir.
264 is the price.
Investor,
The price to book value of this
investor
ratio
think that
is this.
this company will not grow in future, sir.
Please.
Investor think this company will not have any growth prospects.
Not
So
really.
The
Not always.
PV ratio
Not
is less
always.
than.
Not always. There is a reason. What you said is this logic is 100% correct. Actually, this is the reason this company is available such a cheap price. This company is actually good, but this is available so cheap because what you said is correct. Actually, what is happening in the housing finance sector, I will tell you after some time. So see, this is a housing finance company. This is their book value per share. This is their price to book ratio. Right. Now you just look at another housing finance company, Avas Financials. Look at their price to book ratio and their book value. But see, this is not a holistic view. You cannot just stick to one matrix and just judge everything. You cannot paint everything in the same color. See, their price to book is 9.74 times. So their actual value is 304.22, their book value per share. But people are ready to pay almost 10 times for this company, Avas Financials. Now, why the hell they are ready to pay so much? Let us get into the depth of it. Why there are people who are ready to pay so much? Financials, profit and loss. Can you see their growth? This is standalone basis. Let me check the console numbers also. Just a second. Let us analyze this in console numbers, in terms of console numbers. Now, can you guys see the growth that this company has generated over the last 4 years only? Can you guys just believe these
Yes, sir.
numbers? Isn't this amazing growth in sales? From 493 crores, they are now at 1103 crore.
Its profits getting 1.5 times more
What?
by past 12 months. Revenue from operations
Revenue from operation? What?
1.5 times more in 12 months track, and next also, and in next 12 months it gets doubled around.
So they are generating this much of growth. See, this is as on your 20th March, but there was COVID. In spite of COVID, they have grown this much from 902 to 1103. From 900 to 1100, this is not a small growth during the COVID period, right? Now, let us just get into more of it. So, total revenue, including the other income, we are calculating. So, this is the revenue, you can see. they do not manufacture anything, so cost of material consumed, purchase stock in trade is not there. Operating and direct expenses is very less for this company. Stock in trade, it is zero definitely. Employee benefit is the only cost. Finance cost is very high. Why this is very high? We generally say कि if a company is paying more interest, it is bad, right? But this company is
Yes,
paying
sir.
so much
But it
interest.
is,
Why?
but it is finance company,
Huh? Which one?
finance, financial limited,
Finance cost.
finance. No, sir. This is actually finance company,
Yeah,
na?
exactly. So what they do is they borrow money from some lenders, and then they lend this money to people like you and me to buy houses. So this is a housing finance company. So this is their full-time business. सस्ते में पैसे लो, महंगे में दे दो. सस्ते में पैसे उधार लो किसी से, किसी इंस्टीट्यूशन से, और आपका महंगे में थोड़ा आपका खुद का मार्जिन रख के आप किसी और को लोन दे दो. दिस इज देयर वर्क. दिस इज व्हाई देयर फाइनेंस कॉस्ट इज
And
सो.
sir, their revenue from operation also have a interest component that they charge from the customers.
It is net interest income.
Okay.
Yes, this is net interest income. What you have said is fine. Actually, banking and insurance company and financial services, actually it has a different way of looking at it. So you never calculate EBITDA for this kind of NBFC companies or banking companies for that. Okay. So you will never find
Okay,
anyone
sir.
calculating any EBITDA for this kind of financial services or banking companies. If you buy EBITDA is also not calculated for this kind of companies. Anyways, so
Okay.
this is your total expenses. So this is profit or loss before exceptional extraordinary items. Just look at the growth and what can be their profit margin, profit before tax, then expense, profit and loss after tax and before extraordinary items. Till this point only consider. So from 100 to almost 300, 3 times growth. This year, 1 year, 2 years, 3 years. In 3 years, what has happened? They have multiplied their profit 3 times. Isn't this great? Isn't this a super growth? This is why the shareholders of this company and the potential shareholders who are planning to buy shares of this company, they are ready to pay almost 10 times of price of what actually the book value is. They are ready to pay 10 times more of the book value that they are actually getting. And for Repco, they are not even ready to pay what is there in the books. They are paying less. They are ready to pay less only. They are paying only 0.79 book value, right? Is that clear what I am trying to say?
Yes, sir.
So, in this class, today we are going to learn how to calculate price to book ratio. So, let us understand this, how we can calculate price to book ratio all by ourselves. This is, you guys can see what it is. This is standalone statement of assets and liabilities, right? For Jindal Steel and Power means this is their balance sheet. See, standalone statement of assets and liabilities means this is their balance sheet, right? This is standalone. And when you guys are doing any analysis, you must look at all these things. This is 6 months ended balance sheet. This is as at this date. So how much time did they have? They had only 6 months, right? 31st मार्च को ही बैलेंस शीट बनाया था, उसके 6 महीने बाद यहाँ पे बैलेंस शीट पब्लिश किया है. बिकॉज दिस इज द रूल इन इंडिया बाय द इंडियन रेगुलेटर्स की दे हैव टू फाइल माने दे हैव टू present the balance sheet cash flow after every 6 months, annually and half yearly they have to share. And for US companies mostly it is like for every quarter they have to share their income statement, balance sheet and cash flow. But for Indian companies it is 6 months interval. So half yearly you post your balance sheet, cash flow, income statement, and annually also you have to post all these 3 data, and quarterly you have to share only your income statement, means your profit and loss account. Okay. So it is 6 months ended, after the 6 months of this. So this is balance sheet as at. Now just take a look at this balance sheet. For now we will be getting through all these line items, property, plant and equipment. we will have entire class on property, plant, equipment plus capital work in progress plus intangible plus this like that. So don't worry for now. Just look at these numbers as a whole. This is assets, asset side. This is total non-current assets. Is it clear, everyone? Is it clear, everyone?
Yes, sir.
चलिए. This is your total non-current assets. You can see it. So you can just total it and then find out what is the total non-current assets. Current assets, you have this A, B, C, D, E, F. So total assets you are finding it to be 71,161.65. You can see equity and liabilities. Equity, other equity. What is other equity? I will explain in this video itself. I have to explain it. Equity share capital, other equity is there. Then liability section. So see, this is called as this balance sheet portion. This is called as assets. There are two segments in assets. One is current assets and one is non-current assets. Non-current means hardcore assets. Means property, plant, equipment. You have any land, so it will come under property. You have machineries, plant. Then you have intangible assets like goodwill, patents. Then your trademark, all those stuff. See, these are all long-term assets. So what does it mean is non-current assets means these are long-term assets. You can hold these things for long-term. And for current assets, this is a short-term. You can hold it for a small time, not for very long. Okay, so this is why it is called as non-current assets. Means you cannot sell it whenever you want, as per your will. You cannot just sell it anytime you want. And current assets means you can just sell it whenever you want. Not whenever, but yes, still the liquidity is more. So, if you do balance sheet analysis, this is...
Sir.
Yes.
Sir, that period is 12 months.
Which one? This one?
For current assets, that we think when in 12 months we realize our amounts, and for non-current, and we have a prospect that we
Yes.
not realize amounts in 12 months.
Exactly, but
On
is
this
there any
principle, we
guarantee
prepare
that
this
you
balance
can...
sheet.
Okay, but is there any guarantee that you can clear all your inventories from your books within 12 months? Is there any guarantee?
Sir, it's on assumption basis of management.
Exactly, this is assumption. If I take you to some company's website, it is called, one is HDIL, one is Unitech, one is JP Associates, JP Infra. If you go through their balance sheet, you will be shocked to see what is their inventory build-up. They have huge inventory. Why? Because they are not able to sell those properties to anyone. So it is like they are on their balance sheet for like 7-8 years. Same property they hold as inventory and they are having it for 6-7 years. But yes, what you said, this is actually the assumption. If it is less than 12 months, actually Pankaj said it right. Thank you for reminding me that thing. If it is held for less than 12 months, you can consider it as current. If it is held more than 12 months, it is non-current. But there is a hard and fast rule कि this is it. There is nothing like that कि हाँ यही है, यही सब कुछ है. There is nothing like that. Anyways, अरे who is creating so noise? Unmute. Sorry, mute yourself, bhai. Anyways, so this is your current assets. Here it comes inventories, means your closing stocks, your stocks. Then investment in subsidiaries, blah blah blah, many things are there. You don't have to get into it right now. We will be getting into it later. Total asset is this. So total asset is always equal to total equity plus liabilities, right? This is how balance sheet tallies, right? So in liabilities, so okay, this was entirely asset portion. This is entirely equity and liability portion. In equity you have these things, equity share capital, other equities. What is other equity? We will get into it today itself. Acha. And this is equity, this is liabilities. So in liabilities there are two sections. Non-current liabilities means these are not short-term, these are long-term liabilities, you can say, right? And this is current liabilities, means you can say that it is for short-term. As Pankaj mentioned, this is for more than 12 months, means this borrowing, this loan that you have taken it, you are expecting it to pay this debt off. Maybe after 12 months you can like pay it within 2 years, 5 years. So this is long-term liabilities you can consider, and this is short-term liabilities you can consider for now. So now how to calculate this price to book ratio? So for that, Just let me download it so that I can write something upon it. Okay. What is this? Anyways, just take your calculator and
So,
yes.
so somebody listen Basha song. Some,
Ji Pankaj,
somebody listens Basha songs.
what? I'm not reading.
Basha song, sir. Basha song.
हाँ वही साइड में ना मेरा
Song.
मेरे इधर से हो रहा है ना ये कॉपीराइट आके मरवाएगा मेरे को ये इट विल गो ऑन यूट्यूब बड़ा बैड बैकग्राउंड थिंग एनीवेज आई हेट दिस थिंग्स अरे ये सरस्वती पूजा हुआ सरस्वती माँ तो ये सब सुन के नदी में कूद जाएगी एक्चुअली वी हैव अ रिवर हियर एक्चुअली आई एम वर्किंग फ्रॉम सुंदरबन करेंटली सो वी हैव रिवर्स हियर एंड लाइक दोस काइंड ऑफ म्यूजिक वर बीइंग प्लेड हियर अरे बाप रे बाप इट वाज समथिंग अच्छा दिस इज इन द डेस्कटॉप ना what's the problem with this financial 165 16358 ना 16358 यही तो डाउनलोड किया हुआ है take you through it it is yes this is standalone yeah this was I was looking for you will go to the consolidated okay we will start with the consolidated numbers today this will be better for you guys understanding this is revenue from operations this is their standalone balance sheet Pankaj mute this is console financial results just a second this is your अरे कहाँ मर गया इधर okay now take a look at it so here today we are going to calculate price to book ratio right PB ratio so here price is given right price is always available for you right it is always available now what we need to calculate is the book value per share so price to book means price divided by book value per share it is book value per share who doesn't know about it can note down all these things okay book value this is book value per share so how do you calculate this book value now per share you will get this per share data right it is easily available so what about this book value so book value is calculated as you guys can write it down if you want book value is calculated as you have total assets you have total assets you have total assets means
Yes,
you
sir.
have non-current assets plus you have current assets so this is your total assets so you are considering see this balance sheet is as at 30th September right so can you guys tell me it is a very simple question Is this a 6 months ended balance sheet? Tell me. Pankaj won't answer. Anyone who knows, don't answer. You guys try, rest of you. Let's say Sanya, you tell me. Is this balance sheet?
Yes, sir.
Huh?
Yes, it's for 6 months only.
Okay.
I mean,
Correct. You continue it. You say.
because it as at 30th September 2021, it's written.
So this is for the first 6 months,
It's
right?
the financial position. Yes, sir. Financial position as on 30th September.
As on. What you are saying is as on. Focus on that word. It's
Yes,
huge
sir.
different.
As at.
As
As
on
at,
or
sir.
as at, it's fine. As on or as at means what actually is, money balance sheet, this is a statement, right? Balance sheet
Yes,
is
sir.
a
Yes, sir.
statement, right? So it cannot be like profit and loss account. This is not an account. There is a huge difference between what is an account and what is a statement. So there is one statement called as, I think, trial balance, right? So this is as on or as at that
Yes,
date.
sir.
Balance sheet is also a statement. It is not an account. Profit and loss account. Profit and loss is account. Cash flow is statement. Balance sheet is statement. There is huge difference between what is a statement and what is an account. Account means हिसाब. आपके पास 3 months का मतलब means quarterly हिसाब. That is quarterly you are preparing your accounts, right? But statement is not
Yes,
done
sir.
like quarterly or anything. It is like as at that date कि आपका पहले का 6 महीने पहले का ये पोजीशन था, चेंज होकर अभी ये हो गया है. दिस इज द करंट सिनेरियो. स्टेटमेंट मीन्स दैट कि इट इज स्टेटिंग, बट इन अकाउंट्स ना इट इज कंप्यूटिंग कि फॉर दिस पीरियड ओनली दिस हैज हैपेंड. दिस इज अकाउंट. पंकज, can you put some more light
Yes,
on
sir.
this concept? What is account versus what is statement?
So statement is at a particular statement we prepared for at a particular date, like balance sheet as at 31st March 21, as at 30th September, and accounts we prepare for a period like 6 months to 12 months and 3 months
Quarterly,
quarterly.
monthly, even it can be. Monthly,
Yes, sir.
not really, but yeah. Anyways, is this clear? Simple difference. I told you guys this one because we were considering TTM, right? Till this point, we were considering TTM, trailing 12 months.
Yes, sir.
But you can never find any balance sheet item as TTM. You should remember this as an analyst. You won't find a price to book as a TTM. It cannot be. How can it be? Price to book cannot be TTM. You have your book value as on this date, right? As at September. So how can it be like trailing 12 months? It is by default like that. Okay, so book value means total assets you have got. This is your total assets, right? You are considering all this. You can just go and calculate all this on your calculator also. You will find this value only. And you minus total liabilities. Now, what is total liabilities? See, total liabilities doesn't mean this is this entire balance sheet of liability side. No. This is equity and liabilities. This is as per schedule 6, right, Pankaj? This is to now as per schedule 6, na?
Sir, this is according to schedule 3rd. Schedule 6 is for depreciation, and based on this balance sheet is based on Ind AS, not on accounting standard basis.
Okay, no, means actually what used to happen ki around I think 2015 or 14, our accounting standards they said ki as per schedule 6 we have to make, right? But earlier it used to be like T-shaped
No.
balance sheet, na?
No, sir, this is based on schedule 3rd balance sheet.
So earlier was the schedule 6. Which one used to be schedule 6?
Schedule 6 for depreciation, I think.
Acha. Okay. So actually, when I was in school, na, at that time actually the format changed. Earlier we used to do that T-shaped balance sheet. Do you remember?
Yes, sir.
Yeah.
Sir, T-shaped balance sheet is also prepared now, but they use commonly in proprietorship and like a small
Exactly.
firms.
But for the
etc.
listed firms, so they are like using this. I thought ki this is schedule 6, but it is schedule 3 we are saying, na?
Yes, sir. Yes, sir. This is Schedule 3 balance sheet that based on Ind AS.
Okay, Pankaj, for these things, I will ask you one day about the schedule things and what are the differences and how they, get into it. I will talk to you about it later with you. Anyway, so what we
Okay,
said
sir.
is total assets minus what we are doing is, see, you are a chartered accountant, so you have that privilege, right? I am not a chartered accountant, I am just become. I am less educated. What can I
Yes,
do?
sir.
I studied only group 1. I cleared my CPT at first attempt, group 1 at first attempt, and after that, पढ़ना ही नहीं है छोड़ो. What tragedy. Anyways, friends, everyone, see. What we are considering in liabilities, total liabilities means this entire 1 plus entire 2. So, what you should consider is this entire figure. This entire figure is your total liabilities. So you just guys tell me one thing, if you have to do total assets minus total liabilities, what you are actually left with? You are left with only this portion, equity, only this portion you are left with, isn't it? So you are
Yes,
only
sir.
left with equity, equity plus reserve surplus, definitely. Money equity plus other equities, non-controlling interest, it's fine. So what you are actually left with is only this one. And the formula for book value is total assets minus total liabilities, means you are left with this one. So why the hell you need to consider this figure, then so many figures here? Just directly get to this figure. Simple. Why I took you through so much thing, because if you go to any website they have written this formula only. So this is why I had to take you through all these things. Okay, mostly on the various websites they have written this long formula. So I just took you through it on purpose. So what you are actually left with is, just calculate now on your what do you call it, calculator, 102.01. Please calculate with me, don't just sit idle. 102.01 plus you do 32,864.45 plus you do 515.48 equal to how much is this? It is around 33,481.94 crores. Is that clear till this point? Are you guys clear? So, what is the book value?
Yes, sir.
What is the book value? Book value equal to sum total of all these things. So the value is 3,481.94. Why I am considering this 94 as well? There is a reason, because I do not have the entire figure. I have just only till crore decimal place, right? So this is why I am even considering this. This is point and this is 94. This is 94. Okay. So this is the book value 33481.94. Just remember this thing. Now book value per share we said, right? So if we divided it by total number of shares, what we will get is book value per share. Now how come we know that what is the number of shares? How do you know that what is the number of shares? Can anyone guess what is the what will be the number of shares for this company? Anyone?
It will be given in notes, maybe.
It will be given in notes, right? So actually it was given right there. You just missed it. You said it right. Okay, let us not get into it right now. For now, see, this is equity share capital, right? This is equity share capital, but this is into your face value. And face value is for this company. See, this is not the actual way of doing. Actually, she said it right. We should look at the notes to accounts for finding it out. But as I know for now, using a shortcut, I am considering this face value of rupees 1 each. This share, this company has face value of rupees 1 each. So we are considering this entire 102 here. Why 102 we are using? Are you guys understanding? Is there anyone who has any doubt regarding this 102? You can ask me. Anyone, any doubt?
Sir, why 102? If you can explain again.
It has face value of rupees 1 only. This is why if you divide this figure with 1, you will get the number of shares of this only. This is the only reason, and this is the very simplistic thing, but what actually, I do not know who just said it, but yeah, actually her thing was correct. We just we should go and find it out in the notes to accounts, but for now only we are using this. Let us not get into all those stuff. Okay,
Okay.
we have to study the capital structure as well. At that time we will be getting into it once again, so don't worry. So you have book value per share of this. Your book value per share, then we are trying to calculate price to book ratio, price or I see price per share. Is this clear? Price per share by value per share. Is this formula clear? Is this simple formula clear to all of you? Yes, no, anything? Say it.
All clear, sir.
अरे आपका तो क्लियर ही है, आप तो सीए हो, बाकी को बोलने दीजिए. What about others?
Yes,
Clear, sir.
Kush, Pratik, Drushan,
Yes, sir. Clear.
Yes, sir. Clear.
आप लोग नाराज हो?
Yes, sir.
Are you guys angry with me? Why you guys are not talking?
No, sir.
अरे बात कीजिए. तो आपका प्राइस पर शेयर है कितना? जिंदल स्टील एंड पावर का अभी तो JSPL है जिंदल. Let us check the share price. It is 422. You can see 422. 422.35. 422. Calculate it, okay? Don't just sit idle. 422.35 is their share price. And what is the book value we have calculated as per our calculation? 328. Is coming to be around 1.28 and their price to book is 1.13. So it is approx this. This is our calculation is now on what basis also they have posted we do not know. So 422.35 divided by 328 if we do, the result is 1.28, right? This is the book value per share we have got on which basis? On console basis. This is consolidated number, right? So on console basis, see, on console basis we have arrived to this book value of 1.28 per share. Book value per share. I mean price to book ratio we have calculated this. So this was the price per share, this was the book value per share. So this is the PB ratio we have calculated on console basis, price to book ratio. Now let us also calculate the standalone one. Standalone ones is also very important. Okay, this is revenue. This is the balance sheet. Again you can see. So standalone statement of assets and liabilities. Standalone statement of assets and liabilities. So this is their standalone balance sheet. Is that clear? So we are calculating for September. So simple, just consider this much only. We are considering only this figure. As we have already started how to get to this figure, let us not go through it once again and then do the thing. So just calculate 102.01 plus 37,928.98 is result equal to is 38,030.99. You can consider it as the round figure 37,928.98 plus 102.01 plus add 0.01. So this is 38031 approx, right? Everyone, hello.
Yes, sir.
Yes, sir.
Yes, sir.
Okay. So this is your book value you are getting. This is the book value that you are getting. So book value per share, how much it will be? So the calculation is 38031. 38031 is your book value divided by number of shares. So this is actually equity share capital, means this is actually paisa, this is actually 102.01 crore. Okay, but why we are considering this entire thing as number of equities is because their face value is rupees 1. Now how come we are arriving at this? We won't be getting into it right now because it will take long time to understand. So let us just leave it. Just understand it. Face value of a share can be 10. It can be anything actually. It can be 5. These are the most popular face values of shares. 2 and it can be 1. Please don't get into it for now. For this company the face value is rupees 1. How come we have find it out? You can find it in their financial statements, or you can go to any website and also find out what is the face value for any share. Okay, this data you will find everywhere correct. Okay, there was one company, there is one company, I think Future Enterprises most probably have, I don't exactly remember, but most probably Future Enterprises is the company who has face value of 6. And there is one company, probably iShare Motors or Page Industries or what, I do not remember. They have, I think, face value of 50 or 100. I saw it, it was long time back I saw it. So it can also be like that. I do not know how exactly they do it, but I haven't really thought about it any time. But yeah, this is the most popular, but this can also be happen because I have seen myself these two face values also, like shares having face value of this and they are trading. Anyway, so this is their book value. So book value per share means what you do is you divide it by 102.01. So what you get is after that 38031 divided by 102.01. You get is what you get is 372.81. Right? Everyone, what is your answer? Tell me. What is your book value per share? Tell me.
372.81.
Huh?
372.81.
Then 372.81. उसके बाद का नंबर बोलिए आपका क्या आया है?
Then calculating the PB ratio, 659.85 divided by 372. The answer I got is 1.76.
What I am asking you, we were not getting it. Anyways, 372.81.
Sir,
Okay? Yeah.
372.8162925.
Wait, that is what I was asking. 372.70 point
81629.
816. Let us take only 3 digit for now. So this is your book value per share, right? Currently this is your book value per share. Is this clear? This is your book value per share because you have divided it by number of shares of the company. Now what you can do is PB ratio, price to book ratio. So price divided by your book value per share. And what is the price we just checked of this company was 422.35. 422.35. 422.35 divided by this one. So just calculate it and tell me what is the result of it.
1.13.
372.816 wait, oh sorry, 422.35 divided by 372.816, right? So what is your answer? Tell me.
1.132.
1.13, right?
13. Yes, sir.
It's okay. It's okay. We have got the price to book ratio. Now tell me, you thought कि अरे सर का तो हिसाब गलत आ गया. Price to book is 1.13 and his PB was something. See, this is the PB. But what BSE has done, they have considered the standalone number to be on their website. So this is actually their standalone number. Can you guys see it? This is their standalone number. मैच हुआ आपका?
Yes, sir.
Right? अच्छा. Let us also verify this number with other websites. This is standalone number, it is verified. Now for console number, we can also verify it with other websites that our calculation is perfect or not. So actually why I am taking you through it, it is available na? Everyone knows कि हाँ ये तो यहाँ पर मिल जाएगा, everyone knows. But if you know how to calculate it, you guys don't understand. As you are trying to calculate this value all by yourself, na, you guys are going through this entire process, so you know what are the line items, and slowly, as I told you guys, ki we will be doing fundamental analysis. Now, what is fundamental analysis? You can see that it is equity share capital of 102. Now, what is the story behind this 102? How come this other equity has been developed? What is behind this other equity? I will show you this one today because this is very important. So how come this other equity has arrived? We should know it. What the hell is this non-controlling interest? What does it mean? What is this borrowing? What it consists of? We should know each and every number in and out. Why this number is so big? How come this is so large number? What is this other non-current liabilities? We must even understand what is this 0.78. Itna bhi we should minute detail we must get into. See, other non-current liabilities, here it was 0.14 and they have reported it. So can you just understand how serious it is to report only 0.14, 14 lakh. They have disclosed even 14 lakh rupees of other non-current liabilities on their balance sheet. Can you understand the sincerity and seriousness? 14 लाख का फिगर है, उसको भी बैलेंस शीट में डिक्लेयर करना पड़ रहा है. कितना स्ट्रिक्ट रूल है और ऐसा ही होना चाहिए. एकदम ठीक है. चलिए, दिस वाज योर कॉन्सोल बेसिस प्राइस टू बुक रेशियो, राइट? लेट अस वेरीफाई, यहीं पे भी मिल जाए तो. अच्छा, मनी कंट्रोल MTROL, I think they use that year basis. They only consider the yearly number most probably, this company. I checked it once, it may differ with them, I do not know. Yeah, it is differing with them, 1.40, yes, it is differing with them. So now, why they have come up with 1.40? Just tell me. Why this company's PB is 1.40, JSPL, same company, they are showing 1.40 PB. And this BSE website, they are showing PB of 1.13. And in our calculation, one is 1.28. In our another calculation, it is 1.13. So how come it is differing so much? Why? मतलब मेरा एक कैलकुलेशन आ रहा है, अदर वेबसाइट्स का ऐसा कैलकुलेशन आ रहा है. सो which one should we actually rely? We should actually rely what we ourselves has come up with. This is why we are called as equity research analyst. This is why people who work in this field, they are called as equity research analyst. Even financial analysts for that matter, they are also like doing all this stuff. They are just finding out, calculating all these things by themselves. They, all those PMS managers, all those mutual fund managers, actually they have their good team. So like, the small subordinates, they have to calculate those things and present it to the senior all by themselves. कि ये नहीं कि आपका किसी वेबसाइट से मिल जाएगा. How come you can understand कि ये आपका standalone है कि console है? Is this anywhere written as or C and standalone console? Is it written anywhere? So how come you will understand कि ये standalone है कि console है? Now you will say कि अरे sir, this is only 1.13 and your on money control this is 1.14. मैंने आपका only कितना बोलता है 27 basis point का difference है इसमें. What matters? What does it matter? Only 27 basis point का difference है. Why should we be even concerned? It is such a small difference. This small difference can, if it cost you 100 crore rupees, then only you will understand what is the value of this only 27 basis point. If you get to any wrong investment decision and for this kind of minute mistake, if your company loses money now, then you will understand. Or if any day you miss anything like that. Because from these things you can calculate intrinsic value, you can do financial modeling, forecasting, all this stuff. Little here and there mistake, finished. You are finished completely. So this is all about price to book ratio. Now as we have a little more time left, we will be calculating another very important ratio, and especially this ratio is for manufacturing companies, but for financial services firms you don't really use this ratio. Okay, so this is EV by EBITDA ratio, means enterprise value divided by EBITDA, EBITDA. So how many of you are comfortable with the concept of EBITDA? Tell me. How many of you have gone through the EBITDA class which I posted on YouTube today morning? Anyone? Anyone? No one has gone through the video? अरे हाँ ना कुछ तो बोलिए.
Yes, sir. Yes, sir.
Sanya, have you gone through the EBITDA class?
No, sir, not yet.
No, sir.
Anyone hasn't gone through it? Then कैसे सिखाएंगे? EV by EBITDA सीखना है कि नहीं, पंकज जी? आप इतने लंबे समय से हमारे साथ है. सन्या, इतने लंबे समय से आप हमारे साथ है. फिर डोंट कम बैक एंड टेल कि यार सर आपने तो कुछ सिखाया ही नहीं. आप तो सिखा रहे हैं. इतने दिन न्यूज़ एनालिसिस कराया, क्यों कराया समझ में नहीं आएगा. इसमें अच्छा खासा इन्वेस्टमेंट करके पैसे कमाओगे तो समझ में आएगा. मैं क्या करूं बोलिए. एबिटा किसी को नहीं आता.
Sir, I know about
अरे यू नो,
EBITDA.
यू आर चार्टर्ड अकाउंटेंट. छोड़ो, आप तो सभी जानते हो. आप ईवी बाई एबिटा भी जानते हो, बाकियों को क्या. यू नो एवरीथिंग. आई नीड टू कम अप विथ समथिंग एल्स फॉर यू. एबिटा किसी को नहीं पता. नो वन नोज व्हाट इज एबिटा.
सर खाली फुल फॉर्म पता है.
अरे यार तो वही बोल दीजिए ना आप लोग. बाकी लोग ऐसे मौन व्रत धारण करके क्यों बैठे हुए हैं भाई. व्हाई यू गाइस आर ऑन साइलेंट मोड कंप्लीटली. So no one knows what is EV by EBITDA, right? EBITDA ratio.
Sir, EBITDA is basically earnings, revenue minus expenses of regular expenses of the companies, like their
Operating
asset
expenses.
procurement. Yes, operating expenses. Right. Yeah, right. What's up?
What right?
Revenue minus operating expenses, or you can say uh,
At least you are
earnings
trying.
before
You are Sahil,
interest,
you
tax
just joined us
deductions,
yesterday,
etc.
right? Or today morning itself?
Yes, sir.
Today morning, na? At least you are trying, and others they are working with us for such a long time and they are not saying anything. What is this? Sanya, we haven't done this. Shubham, he was saying we have. What about others? What would that be? Anyways, let us go through it. Otherwise, see, Pratik, Pankaj, and Sanya, and Shubham Jushan also start working on the equity research
Yes,
report
sir.
of steel companies.
Okay,
What
sir.
is
I will provide also summary of union budget to you by tomorrow.
okay, fine. And what about that capex thing? I told you guys to make a presentation on union budget capex, right, of 7,50,000 crores. Where is the work? Where is the PPT?
So you not ask to me for this.
No, I didn't ask you, but others.
Should you
Okay.
assigned it to someone, I guess?
And they are not here. Very good. If you miss your class, it's up to you. What can I do? I'm ready here to teach. Even if one candidate comes, I will teach. If you are not able to learn, it's up to you. It's your mistake. Okay, who is up for this small work? Who is free tomorrow? Who is going to be free tomorrow? We have an assignment for you. Is ready to contribute for the assignment?
Sir, I'm busy this entire week.
I know you were busy, other than you. And Pankaj, if you are available, okay, fine. No, Pankaj, you do that thing. Whatever I have
Okay,
assigned you,
sir.
you just work on it.
I will try, sir.
Okay, you just try it. Okay, what about others?
Sir, I will get to know if I am free by tomorrow morning.
What about others?
Sir, I have pending assignments of college
I know you
itself,
have
like
assignments of your college. This is why I'm not asking you. What about others? So आप लोगों को कुछ भी सीखना नहीं है, right? You guys know everything. There is no need for you to do anything, right? Okay, leave it. What's my problem? It's a shame. You guys are not even ready to learn. What can I do? Lakshmi Priya?
Sir, I am Naveen.
Yes.
Sir, I am free, but I just want to know what the assignment you are gonna say.
Budget, make a PPT on budgets capex, like proposed capex of this union budget is 7,50,000 crores, right? So you just read,
Capex, sir.
yeah, capital expenditure. They have announced of that they are going to make a 7,50,000 crore rupees of capex in this coming
Okay.
FY.
I think this thing you are sent for some other person last week,
And this
last
is why
Friday.
the work is not done yet. Our company is asking for it. Why? The seniors are saying, where is the presentation? I'm saying I assigned it to the interns. They are asking me, what's the status? What is the presentation? Today also they asked me, and you guys haven't sent it to me. What is this? Why? This kind of irresponsibility I cannot tolerate. Anyways, up to you. So Naveen, you are up for it, right? So what you actually have to do is, it is very simple. Government has a proposed capex of 7,50,000 crore rupees. They has announced. Just a second. Yeah, sorry about that. Yeah, so what I'm saying that
Sir, actually, I am doing that union budget ka this one
intern
summary.
summary, na?
50% of it is completed. Tomorrow, by tomorrow evening, I'll be submitting that union budget ka
Okay, Naveen, you just focus on this thing, this capex. We actually really need it.
Okay. Okay.
Budget took place in on 1st of the February, and still we don't have that briefing. So please, you just work on it on a like emergency basis. Who are there? Who is willing to contribute? None of you. What about you, Vivita Agarwal? Vivita Agarwal. Prosenjit Saha.
I'm having graph.
You. Samrud.
Yes, sir.
Will you be working on that project?
Okay, sir.
So why didn't you just come up and tell that? Why I have to come and ask you?
Sir, because today is my second lecture. I,
If you have any doubt, you can just call me up anytime. Na, I told you. Why you like so fearing this class? Arey yaar, come forward. Face these challenges. Otherwise, you are not going to learn anything. After this meet, you stay. Okay. I will have a small conversation with you. Okay.
okay.
Samrud, and whoever has joined us, within just last 2-3 days, please stay back. After the meeting is over for others, we will have a short conversation. Okay. I think you guys are not able to understand what we are working on. So for that, I think I must personally attend to all of you, so that you guys do not have any doubt or anything for that matter. So it is already too late at night. So what I will do is I will share the EV by EBITDA video by tomorrow morning. Okay, I will make the video tomorrow morning and share it by around maybe noon time on YouTube. So you guys must go through the EV by EBITDA video on YouTube, on our YouTube channel. Okay, everyone, is that okay? Fine with you?
Yes, sir. Yes, sir. Yes, sir.
So who will be working on this capex thing, budget capex? Navin, and this person, Samrudh Somasai, and Saraswati. What about you? Will you be working on this?
Okay, sir.
No, you are working on this. I know that. What about you? हाँ. ठीक है sir. Saraswati, Ravichandran. Okay, so you are in. Okay. So 3 of you, just okay. The meeting is over for now. So those candidates who has joined us on last Saturday, Sunday, Monday, Tuesday, today, stay back in the meeting. Okay. And whoever has any doubt, suppose you have joined on Thursday or Friday, Thursday or Friday, like you guys can stay back if you have any doubt or anything to share with me. And okay, about Pankaj, Prateek, and all of you. So Pankaj, what you are working on currently?
So currently I'm working on union budgets and equity research